Well, welcome back to Coffee with the CEOs. I'm happy to have Mike Longo here with me today. He is the host of our Mentor Mindset and AFG Update. Today, we're going to talk a bit about a few things, but I think it's important to know that as an organization, Jerry, Mike, and myself work very much together, being sure that our organization runs well and being sure that everybody is taken care of from a client standpoint and from an agent standpoint. So we work hand in hand every single day.
Yeah. Thanks for having me today, Mike.
Sure, great. Today, we're going to talk about a few things that relate to protection. And it's very important that when people talk to us, they understand there's a process involved in the work that we do. And the process is not just, I could back up a little bit from the standpoint that process is more important than product. When most people see individuals they're going to work with that are supposed planners or investment people or insurance people, they talk about product. We want to talk about process. So we're going to talk today about the protection area first. And I want to start with the simple thing, because when you think about it, one of the first financial products that you buy is when you turn 16, you get car insurance.
Right.
So let's talk a little bit about that from a process standpoint. Mike, what's been your experience with the car insurance and what people need to know?
I think there's a lot. I mean, depending on where viewers are watching from, every state's different. So coming from Ohio, going to Florida, very different rates, very different rules around drivers, whether it's adults or kids or who has the car or who the title is in. And I think there's just a lot to explore. So going online and just getting whatever the cheap coverage is probably not the best option, and really consulting with somebody to go through a process of what makes the most sense. I know we see it all the time. The uninsured or underinsured motorist policy kicks in on a lot of our clients' policies because there are just a lot of people that are driving without anything, and people have nice cars down here. So if you don't have the proper coverage, I mean, it could be a huge blow to your balance sheet. And I think that understanding the limits is probably the most misunderstood thing in insurance. So people get their statement and they see the two numbers next to each other, whether it's 1,335, and they really don't know what that means per collision, per incident, per person, and it's just really important that people actually take a look at that and figure out, okay, what is the importance in the coverage, not just the premium I'm paying, but the deductible. What is my actual risk exposure? How much money do I have saved? Can I lower the cost if I pay more of it myself? Like I joke around all the time. If there's a $250 or a $500 claim to your car, are you really going to file the claim or are you just going to pay it? What are your rates going to go up in the event that you make the claim and then pay the deductible and you end up saving 50 or $100?
Sure, right.
And I think that that's something that a lot of clients really need to take a look at and figure out with a professional of how do I make this the most efficient? We're trying to mitigate loss. It's not a matter of in our world of insurance or asset building where we're trying to achieve a goal. It's literally mitigate the most risk for the lowest cost possible.
Sure. It's interesting the things that I've found over the years. People don't understand their insurance at all. They don't understand their deductible for comprehensive, or they don't necessarily understand their deductible for collision and what they have to pay for it. Even if you look at it from the standpoint of the limits of liability. So let's say people see a good policy, maybe $100,000 per accident, $300,000 aggregate on the accident. But yeah, if you think about it, if you get into a car accident with someone that makes, let's say, $50,000 a year,
Right.
and they're going to work for 30 years, okay, well, that's $1.5 million of earnings.
Right.
That if you get into an accident and they can't work anymore, there's a $1.5 million lawsuit that's coming your way.
Right.
And yet you think that $100,000 of insurance is a lot. It's not. It's not nowhere near the amount.
A career in financial services is about freedom and relationships, both for you and the clients you serve. By building intentional, authentic connections with people, we not only create an environment where advisors can succeed, but also puts you in control of your future. Financial success looks different to everyone, and it's more about the process than the numbers. If you are someone that is looking to make a difference in your life and the people closest to you, go to the website below and schedule a conversation today. Back to the podcast.
And I think one of the biggest things that we see, especially when we're going through our planning process, is if it's just the auto insurance, they're underinsured. If there's
Yeah.
not a substantial umbrella policy in place for most of our clients, there is a big need for them to look at excess coverage or excess liability, or if they own a business, general liability. Because like you said, you don't have to run into a millionaire to have millions of dollars of exposure. It could be the 50 or $60,000 earner that just has a bad result from the accident that's triggering a 7-figure claim.
Sure. And it's fascinating how many property and casualty agents, they're good agents.
Right.
They just maybe forget, or it's just not part of their system because it's part of our process that we talk to everybody about
Right.
their umbrella policy, because the umbrella policy itself sits on top of the car.
Yeah.
It sits on top of the house. And down here in Florida, really, really important. I see so many people that have boats. Do you have your umbrella policy that's covering the boat? Because there's so many boating accidents.
Right.
And just a simple mistake of not turning off the engine in time, or somebody jumping into the water where it's too shallow. The other thing is side-by-sides, ATVs.
Right.
I see people that don't insure them. They just go buy them, but they don't insure them. And you may not necessarily be able to insure them for damage, because
Right. They're going to get damaged.
that's what you do with them.
Right.
But you can certainly insure them from a liability standpoint. And I think in golf carts are such an important part, because I see grown 60-some-year-old people, and they're pretty sauced when they're driving around in these golf carts. It's a pretty big deal to make sure that you have the proper liability
Right.
to be sure that everybody's protected.
Right. I mean, I think there was just a story. What was it? John Elway's agent or
Yeah.
some professional athlete. They were driving a golf cart. I don't know all the details, but somebody passed away.
Yeah, lifelong friend.
Right. And just things like that happen. It could be completely innocent. You could be packing too many people onto a boat, onto a golf cart, onto whatever it is. And tragedy could kind of hit at any point. You want to make sure that you're covered. And like you said, it's really understanding what it is that you have. I think in our business, and especially just insurance in general, it's really easy to talk to a client and say something along the lines of, I'm going to save you money on your premium. I want you to become my client. I'm going to save you money. And maybe it's cutting a couple corners here or there, but really going through and saying, okay, this is what you have. This is why you're paying this, rather than just having the transactional mindset.
Yeah, it's fascinating. They'll save money on car insurance. That's maybe 5 pizzas a year.
Right.
And yet they don't. That's what they have to. And they're worried about where the investment's going to go, because the investment gets wiped out in a heartbeat.
Right.
And you want to make sure you're protecting against people hurting you or people in your car, as well as just simple accidents that's not your fault, but they're in your car. They're your friends. They're people you want to take care of. You need to be sure that they're going to be able to be taken care of if something should happen. That umbrella policy is huge.
Yeah.
I know when my daughter was young, she was riding down the street in her bicycle with one of her friends. Weird umbrella policy, because they just bumped into each other, and her friend ends up going headfirst into a tree.
Oh, wow.
Luckily, she had a helmet on, but she still had to go to the hospital. She still had to be taken care of, and there was some minor damage that she was in the hospital for a few days. But what if it was significant? We had that umbrella to be sure that she was going to be taken care of. And it's important that I know that they have proper coverage to be sure that everybody that I care about, that I'm friends with, that I love, that are going to be cared for. And we don't even sell property and casualty insurance. We don't make any money. We got to make sure that our people are protected and make sure that they own the right stuff.
Right. Yeah, it's really insulating the balance sheet. So it's funny, the first thing that we talk about with most clients is something that we don't sell. And it's the foundation of really making sure that protection piece is coming together, because like you said, one minor accident, one slip and fall at a house, one pool party gone wrong, and now all of the assets that are built are gone in the blink of an eye.
Yeah. I think everybody knows the story.
Right.
And there's some story out there that you know of where something, like you said, something went wrong in blink of an eye. but yet you have to be sure that when you work with us and you work with our clients, that we have that proper protection in
Right.
place. I think the next thing to talk about would be on the health insurance. It's really health, disability, and long-term care because
Right.
those really go hand in hand as health insurance contracts. What have you seen in the process of taking care of that for our clients?
Yeah, I mean, on the health insurance side, if you work for a corporation, you're pretty well handled.
Mhm.
Small business owners, it is a tough market to navigate. Finding somebody that is knowledgeable that can put rates in place or get favorable rates. I mean, obviously, with our company, we have health insurance. With other businesses that I have, again, a place where you want to protect your employees, you want them to come to work and have this benefit. But for a business owner, it is a major outlay in that in that P&L statement. And that is typically covered. Like for whatever reason, employers say health insurance is a must,
Mhm.
kind of across all industry lines. And then you go to the next step of disability, and it goes way, way down in percentage offered and the range that is offered. Health insurance pretty universal. Like you get sick, bills are covered, standard rates, and it's across the board. Disability could range from anywhere from just short term, long term that you may have to pay for, long term with a benefit that's only a fraction of what a different company's is. And that's where our clients really need to look and say, okay, if I'm changing jobs or if I was at a company before, what was my benefit? What do I have now? And what is my true exposure? Because I think just like health insurance, clients will look at the disability and say, I have it, so it must be good because the health insurance is typically good. But there is normally a gigantic gap in the health insurance space with some type of group policy from an employer.
I agree. And it's interesting. I'm 63. When I was started in the business, I mean, it was Blue Cross Blue Shield to a great extent. That's what everybody had. Everybody had health insurance. And as I go through the decades, it fascinates me that we as a company, we as a society believe it's more important. Don't take this the wrong way. It's more important that our doctors and hospitals get paid than that we get to keep our mortgage, our houses, our cars,
Right.
be able to have money that comes in for food to take care of ourselves. Very few people that go to the doctor or go to the hospital pass away. They
Right.
come back home, but there's so many of them that can't work, and so few of them that have money that they can withstand 30 days, let alone
Right.
maybe years of becoming disabled. So that disability insurance is such a key
Right.
factor. And on the group side, most of the time the high wage earners are discriminated against
Right.
on the group because the group limits them to maybe 5,000 a month, maybe 10,000 a month, maybe 15,000 a month. Even that, if you're making $1 million a year, have you really looked to see,
Right.
is there something else that you should be getting to be sure if something happens, are you able to pay your bills? And that's really important in the process, whether it's group insurance, and group insurance is great. But if you leave your employer, or if for some reason the insurance company, I've seen lots of insurance companies go out of business in the disability marketplace. If they stop selling the group, do you have an individual contract
Right.
that you can take with you? Do you have an individual contract that you can buy more of and protect above the group to be sure that your family's taken care of? And keep in mind, you're the beneficiary.
Right.
You're the one that they're writing the check to you. So you got to make sure you take care of everything. So disability insurance is it's overlooked.
Yes.
I don't know that advisors talk about it enough. And certainly, as a general rule, everybody should be looking at disability insurance at the exact same time they're looking at their health insurance. Every year, they should be reviewing their disability insurance, group and individual at the same time.
Right. I agree. And as we know, disability insurance is much harder to get than something like life insurance and obviously something like home and auto insurance. So when people don't get it when they're young and life happens and they get some of the the issues of aging, it becomes harder. So you may have a great policy at your first job, but then you go to a new place and you don't have it, but you're 5, 10, 15 years older and you had some health issues, you may not be able to get your own coverage. Thank you for joining us today. Through our shorts and through our full length content, we try to put out the most relevant material for our viewers, for potential advisors, for people in the industry, or just anybody with financial interests in general. If anything resonated today that you want more information on, go ahead and click the link below me. Click on Talk to a Financial Professional, and one of our professional advisors will reach out to you and have a one on one conversation with your personal situation. Now back to the podcast.
Again, let's talk about the next step a little bit, because people do ask the question about kids. Let's go back to kids.
Right.
About having wills and trusts.
Yeah.
What's been your experience in that arena?
Probably the most overlooked or unupdated area on somebody's balance sheet. So there are some people that'll have documents from 20, 30 years ago. Some people that have kids that, hey, we've been meaning to get around to it and just haven't. It's, I would say probably one of the biggest voids that we see whenever we're going through the process. And, everybody knows that they should have it. I think there's a lot of misunderstanding around what they are. So they hear will, they hear trust, they hear power of attorney, and they've heard the words, but they don't really know exactly what it is. They think, oh, a trust is for ultra rich people. And they don't realize that if both parents are gone and their kids are 5 and 10 years old, you're leaving all of your money to minors. And there needs to be a vessel that has that with control rights and somebody attached to it to make financial decisions. I mean, I have a 4-year-old daughter. I don't know that she knows exactly how to spend the money that's going to be left to her in the event that I'm not here. I mean, she'd probably want to buy a bunch of pink unicorns and stuff like that. But having somebody and having the conversation around not just the documents themselves, but who are these people in your life that are going to step up if you're not here? Who is the executor of the estate? Who is going to take care of the kids? So it's great that you have this will and you have all of these documents of what's going to happen. But if something happens to me and to my wife, our daughter goes to somebody. You better believe that we vetted the financial security of that person before we picked them. Because what if our daughter goes there and now she becomes a huge financial burden on those people? So I think people think, oh, this will be great. My sister will take them. My brother, my uncle, my niece, my nephew will take our child. They may be the worst with money. And now you're throwing another, like, I don't want to call it a liability, but you're throwing another person into their household. And it's really important to have these documents set up where maybe somebody is great with kids and they get to have the kid. And maybe there's another person that's financially responsible and they handle the money for those people. Because throwing a big chunk of money at somebody that has their own financial problems with another human being could be a very scary thing. And we've seen that in certain cases where money was left and really depleted and didn't go for the intention of what the kids or the beneficiaries needed.
Sure. I mean, I remember back fairly early in my career, there was a couple that had died in a boating accident in Cleveland, and the children were left. And actually, there was a lawsuit between family members because they wanted the kids. So they went to court to see who was going to get the guardianship. I don't know if they wanted the kids or they wanted the money.
Right.
So there was a bunch of money. So they wanted the money that went with the kids. I mean, when you have to have that stuff, so you have to decide who's going to be the guardian of the children, who's going to be the guardian of the estate. More often than not, and in my world, it should always be somebody different. You should always have a guardian of the person or the guardian of the estate. The guardian of the estate should always be somewhat corporate, so you can have a person, and then you should also have either a trust company or a bank,
right,
or someone that can get sued and someone that has the fiduciary responsibility to make sure that the money doesn't get wasted or stolen, so that child is taken care of, because it's not just until they turn 18, it's for the rest of their life.
Forever, right.
And so you have to have proper documentation, and people can poo-poo, oh gosh, it's going to cost me $1,500 or $2,000 or $3,000. Oh my gosh. This is your child, the rest of their life, that you need to make sure that's taken care of. So come to us. We'll talk to you with the attorney. We'll make sure the process is done right. And we're going to be there to take care of all of that with the attorney to make sure everything gets done. Because without that, you have courts deciding how your children are going to be raised, and you never want that.
Right. And I think too, one of the big things that we've used a lot this year and last year, obviously with a ton of people coming down here to Florida, is people move down from northern states
Yeah.
and they come in and they have documents. Now they're in Florida, they need to change the documents. So they'll give us the originals. We send them up to our business resource center. They'll take a look at them. They redline things that need to be changed. And now you go to an attorney down here and you turn a $3,000 bill into a $500 or a $700 bill because you have a red line document where things just need to be updated.
Yeah, it makes a lot of sense. You're not going into anything blind because
Right.
of the work that we can do, because we have a whole team of accountants and attorneys at the Business Resource Center to make sure that that gets taken care of.
Right.
So enough about wills and trusts, but
Right.
it's so important.
It
Like you
is.
said, it's often overlooked. So let's touch on the last piece. Let's talk a little bit about life insurance. I mean,
Yeah.
we could spend an hour and a half talking about life insurance.
We spend days talking
I'm
about
a
it.
huge fan. I own a lot.
Right.
But talk a little bit about your experience in the life insurance world.
Yeah. I mean, it's impactful. I mean, not just from the standpoint, I mean, I've done this for 15 years and unfortunately I've had a handful of clients pass away. I've had even more clients have sickness, injury, illness that has caused them to never be able to get insurance in the event that they want it, whether it's children, which is something that's currently going on with one of my clients, whether it's somebody in an age group that's very similar to me in their early 20s. Stuff happens and you never know when it will happen. And the cost of insurance is so cheap. I mean, there are different kinds and different things that you can go into with bells and whistles of how it works, but just the pure protection of it is very, very inexpensive for young, healthy people. And really a must whenever there's a spouse or a significant other or a child, to make sure that if you're not here, the person that doesn't have the ability to vote gets what they should or what they would vote for had they had the ability to.
Oh, no question. And I'm teaching the interns now about amounts of insurance, and I'm talking to 22-year-olds that are going to be making 200. If you think about it, money expands rapidly, so
Right.
they're going to be making a modest income, maybe $200,000 on an average between
Oh,
now and the next 45 years
for
as
sure.
they're working. I mean, that's upwards of $8 million that they're worth.
Right.
Now, I'm not going to run around and say, hey, everybody needs to buy an $18 million. Maybe they do,
Right.
but from the standpoint of, you got to figure out what's the value. What you're a walking, breathing ATM machine.
Right.
You don't have to you don't have to insure the whole thing, but take a look and see what its real worth is, and then maybe back it down to the present value. But be sure that you have the proper amount, and then sit down and figure out what are the proper types, because the industry itself keeps coming up with new products
Right.
that, in my experience, a lot of the new stuff from the 70s didn't work. Some
Yeah.
of the stuff that they have out today,
Yeah.
I don't believe will work.
Right.
So it's best to go stick with what's going to work and what has worked forever. And that's a big part of the work that we do.
Well, I think what you said is exactly right. I mean, you can look at charts of when products were created and then when they were phased out. And the products that have been around for the longest period of time are the ones that are still going. It's funny. It's like everybody gets enamored with the new shiny object. But when you look at all of the information about like the top selling ice cream flavor, it's vanilla.
Yeah.
And second's chocolate.
Yeah.
Like that's what people need. Like you need term, you need whole life. The stuff that's been around for the longest period of time, all the other glitz and glamour and features and different things like that, they have a place. But for the regular person, those are things that are just going to be tried and true and work exactly how they're supposed to for hundreds and hundreds of years before, like they have.
Perfect. Let's wrap up with that. That's great. So I think I want to encourage everybody that watches this, make sure that you're looking at your current coverages, review your documents, give us a call, go online, uh, make an appointment. We can do a Zoom, maybe just for a quick half hour to show you the work that we can do to make your life better. Hey, we just want to make the process work. You can decide if the product's got something that you want to do. Process costs you nothing. Costs you a little bit of time just to make sure that you, your kids, and your entire family is taken care of and you're doing the right thing. So reach out to us. We want to take care of you. Thanks.
This podcast is intended for general public use and is for informational purposes only. The information should be relied upon only when coordinated with individual professional advice. Neither Guardian nor its subsidiaries issue umbrella or auto insurance. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. Michael Kochis is a registered principal. Michael Longo is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS. Securities products and advisory services offered through PAS, member FINRA SIPC. Michael Kochis is a general agent, and Michael Longo is a financial representative of the Guardian Life Insurance Company of America. Guardian, New York, NY. PAS is a wholly owned subsidiary of Guardian. Alliance Financial Group is not an affiliate or subsidiary of PAS or Guardian. Michael Kochis, CA Insurance License 0I00307. Michael Longo, CA Insurance License 0M21715. AR Insurance License 15838330. 8189805.1 expires 727.